Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. Yesterday, the Senate passed its version of the Big Beautiful Bill. It includes the provision to ban feedstock outside of North America in production of biofuels, and that is definitely providing a boost to the soybean market. It's one of those things that with this ever-changing bill and things being taken out and been replaced from the House version, market needed to see that it was going to be something that actually got to the finish line. And there's every bit of expectation that the House is going to pass the revised version with the changes the Senate made today and be signed by President Trump um, by tomorrow, or should I say by the 4th of July, so by Friday. That's been one of the things we've been waiting on with soybeans. We're also waiting on trade deals. We've since learned that these trade deals are basically done, or many of them are basically done, but they wanted to wait for this bill to be passed. So, kind of a two-step process here: get the bill passed and signed and cemented this week, and then hopefully we'll see a flurry of trade deals next week. And all of these things we expect to help give a boost to soybean market specifically, but really in general, all agricultural markets. It just depends what's in these bill or these trade deals. But we have every reason to believe that the trade deals are going to be favorable for farmers. We're also seeing some of the long existing weather issues with wheat continue to aid prices there. We're also seeing downgrades in the Russian wheat crop. And of course, we've got our own slow harvest pace. But Argentina is having weather issues with getting its wheat planted. Um, Europe has been having issues with its wheat crop for some time. Black Sea region, Australia, Canada, you name it. China had their issues a while back with uh, extreme drought in their wheat and corn growing regions. And I think all those things are starting to really show up now. I mentioned yesterday that over the past 6 weeks, money managers have more than halved their short positions with wheat. So it's been ongoing, but it seems to be picking up pace. That being said, we are still really only around where the USDA has average prices for wheat forecasts. So definitely want to give this more time and see higher prices before we think about making any additional sale recommendations for wheat. Would anticipate that perhaps we'll be able a chance to sell out of soybean crop sometime this month, depending on the result of these trade deals. On the bear side, it's still much of the same. Good forecast in the United States for the next 2 weeks, right into the height of pollination. Temps even getting more seasonal over the next couple of weeks from the extreme heat we've been seeing, and precipitation moderate amount. That really hasn't changed. Precipitation's been pretty consistent and moderate here for a while. That's looking to continue. Low risk of a heat dome, but at this point, we're looking at if it develops, it would come likely after pollination. And then the forecast for a bigger, better South American crop continue to come in and just continue to reinforce that we're likely to see an adjustment from the USDA at some point. A lot of that's priced in, but now we have to start to think about is the U.S. crop, is the USDA actually underestimating the U.S. crop? We know what the acres are. We know what the yield projection is for corn 181. There's people starting to talk about, if we get perfect weather, if this continues, anywhere from 2 to 4%, growth over last year's yield, and we'd be looking at, potentially yield in the mid 180s. And what would that do for the size of our crop? So that's probably going to be another thing that we'll have to start we'll watch as how much that weighs down anything bullish that happens over the next month or two, which our primary source for anything bullish will probably have to come from these trade deals. So we really have to hope these trade deals have some very strong commitments by these other countries to import our agricultural products. Taking a look at the weather, as mentioned, favorably moist for seasonal temps in the United States. In China, haven't updated them for a while, but they have gotten drought relief to the north, and where they had flooding in the south, it is beginning to dry out. So their situation is improving quite a bit there. In Western Europe, their heat wave is coming to an end soon. There's rain in the forecast for next week. Even if the rain doesn't come, the biggest thing there is it looks like the end of their heat wave is finally arriving, and that's going to help them out a lot. In Brazil, it's drier based. It's allowing them to get wheat planted, and it's also helping to dry out the safrinha crop as they reach the end of their season there. Bringing up international prices, finally have done it. The U.S. has the lowest price corn. We've finally gotten below where Argentina was selling corn at. It had dipped all the way down to around $189 per metric ton. We dipped into the low 190s. We're actually starting to come up a little bit, but they've actually come up quite a bit more. Their export tax holiday has ended, and it's you can see the impact there. So the sales coming out of Argentina are going to slow dramatically here in July, and that has not only helped us to catch up, but actually now offer a better price than what's coming out of South America so far as corn. Closed the gap quite a bit with soybeans. Typically had been around a $20 gap, or within around $11 now. And Argentina's price will likely continue to climb. And we're also very competitive on wheat, as we have been for much of this past month or so. Just the what's coming out of the Black Sea ports is lower, and that's a very limited amount, as Ukraine is not able to export a high volume right now. So we definitely have prices on our side to help prevent what we're seeing on the futures market, help prevent things from going even lower. Taking a look at the overnight, soybeans continue to climb as they did yesterday. Corn and wheat pretty flat. And corn, as a matter of fact, is just about exactly where it was at this time yesterday, while beans are up about 11 cents in the last 24 hours and wheat is up about 10. Every reason to think that we'll continue to climb this month with soybeans, especially. We got to hope that these trade deals help corn and wheat as well. Wheat will probably still be more of a weather-driven market, and best hope there to continue climbing is that reports of crop conditions and yields from places like southern Russia continue to weaken and allow for more price growth from this point and get us above these current USDA averages, which was where things rest right about now. We will have the Grain Gauntlet Q&A out for you later today, and then tomorrow will be the last trading day this week with the 4th of July on Friday. And so we'll have the feedlot focus, the cattle and hog market update coming for you tomorrow. Hope everyone has a great day. We'll talk to you again tomorrow.